Good morning, and happy Memorial Day, and welcome to the Rick Helps Real Estate Show, Traveling Road Show Edition. Hope everybody's having a great weekend so far. We're going to try and make sense of this crazy Arizona real estate market, and it is not getting any nuttier. It's actually been pretty calm. And speaking of calm, this is where I'm staying this week out in Carlsberg, Washington. So that's kind of fun. And the weather has been fantastic. Had a great shrimp feast. My brother's yesterday, he went out and caught some fresh shrimp out in the Straits of Juan de Fuca up here. And I got to tell you, the cold water shrimp is so good, so much better than the stuff I get at Rocky Point. But enough about that. So what are we seeing in this Arizona market right now? Now, the markets are closed today. So the interest rates I'm showing you down the bottom there are Friday. Good morning, Danila. And so there is some movement in the overnights with the stock market that are looking positive because, well, lo and behold, they're looking like they're going to reach a debt deal. Surprise, surprise. Who'd have thunk that, right? So what we're seeing though, and then this is where we're at here, 7.14. And good morning to you. And so it hasn't changed much, but here's a comment here. Relief over the debt deal. Most markets are open at the rise. So these are international markets. I'm not celebrating Memorial Day. So they're going up. Hey, guess what? We're going to pay our bills. Everybody's excited. But the interesting thing I want to look at, and the reason I say that we've got calm markets is we're not seeing these wild swings up and down. Check this out. Now, back when interest rates went from 3.5 to 7 quickly, like right around here, look what happened with listings. Everybody said, "Oh my gosh, let's get our equity now. Let's get out. This is looking bad. We all know where this is headed." And then listings started coming back down. And let's see. Let me put the actual listings up here. That's not it. So listings started coming back down, and they just haven't put them back on. So now rates are back up once again to 7.25, and we're not seeing this run to the hills. So there was a large amount of people. We went from 7,000 listings to 19,000 listings in just a matter of weeks. And then they said, well, that didn't work. I give up. So that's what we're seeing. People are like, I thought I could get all this equity. I'm going to get out. And so they bailed. And we had the most amount of expireds on December 31st that I'd ever seen. Now, does that mean that they're going to get back in eventually? It's not looking like it. Interest rates have gone up. They've seen that the market did not collapse. We did have quite the correction, down about 17%, but it has clawed back from there. And the one number that we watch quite a bit is the listing success rate. And the listing success rate keeps climbing. This means only 17% of people listing their homes are not getting an offer. So it's not going down. Now, the numbers are dramatically slower than they were last year and the year before. The success rate is lower, but you can see how it came plummeting down here. So again, that's when interest rates went up. So everybody kind of panicked. But when they put their homes on the market, they started asking too much money originally. The Cromford Market Index is still climbing, although just a little bit slower, and we can expect some slowdowns with the rate increases. And we're seeing the average list price per square foot right here kind of start to level out. And that could be either seasonal, but I kind of doubt it. It's actually due to the rate increase. Rates go up, house payment goes up, your list price is going to have to come down. The other thing that we saw that was brief was the amount of seller contributions actually declined. We were sitting at about 9,900, went down to about 7,900. I expect that once again to go up as sellers try to entertain offers and offer a rate buy down for you. And the 2-1 buy down seems to be the most popular product that's out there right now. And so I expect that to show up, but that's a lagging indicator. We're not going to see that until 35 to 45 days from now when they actually show in the closed listings. So what's going on my 7-day moving average as I lean over here and try to pull this up for you? And what that is I track the number of new listings that come on. You can see it in the ticker down below. 3,369 new listings, 3,060 contracts. The thing that kind of sticks out to me is here's where the new contracts are right here. It's pretty much flatline below where we were right here in early spring, but pretty much flatlined versus the rest of the year. So it hasn't, while it's slow compared again to the past 2 years, we're actually kind of still sitting in what we call the typical range. So sales are slow, and this one shows you a little better illustration here. You can see where we are in May, right where we're in April. Draw a line here, and you can see that sales were pretty brisk around 2021, but not too far off of the early part of 2021, which is January, February. The last time we saw numbers this low looked like it was back in January of 2020. And wasn't that about the time that we were starting to be told to stay home and flatten the curve? And this is where things got really dismal down in here, which is December and January. How you doing, Keenan? So sales are slow. They're down about 46% versus last year. But if we look at typical sales, they're not down as far as what our average is. And that can get kind of confusing because we have a higher population. And so average sales, I would expect to climb. Now, I did see a video from one of our favorite ones, one of the negative Nellies that's out there, and yesterday saying that new construction prices have been reduced 15%. And here we go. The end is near. We're up 3.3, folks. That's the real number. We're up 3.3% in new construction in pricing, and their volume is up 10%. The reason is there's not a lot of inventory available in our resale market. So people are gravitating towards new construction for a couple of reasons. Reason number one, they have bought down the interest rate. So they're offering you 4.8, 4.9%, 30-year fixed. A lot more attractive than 7.14, wouldn't you think? And they're move-in ready homes. They have spec homes now. So you're not going in. You don't have a bidding war. You don't have to sign up for a lottery and see if you can get the lot and wait it out. So there is new home construction is attractive, except for the fact that most new homes in the valley are a lot farther out in the suburbs. Now, if you don't have to commute into downtown Phoenix, that's not necessarily a bad thing. They're building some pretty nice suburbs out there, some new construction. Pulte Home is starting to enter into the entry level housing market for first-time home buyers, building in between 350, 300, and 375. That's a good thing. Seeing that up in the Pacific Northwest as well. But there isn't a lot of resale to pick from. So you're sitting here looking at 12,000 listings. If you really filter it down and say, well, I want a single family home in this market between 400 and 600,000, that's only 4,900 homes. So not a lot to pick from. So people are saying, well, and then when I go look at it, it looks like they need some work, some improvements. Some of them are older. I'm just going to go get a new build. So new build is not suffering, despite one of the YouTube videos that said that it's really bad out there. Sound like I'm picking on him, but you know what? I am. Put the right numbers out. Show me where sales prices are down 50%. Put the actual number up. Now, I pulled mine from the Cromford Market Index that tracks it every month from the county records, Maricopa County records, up 3.3 year to date, up 1.3 for the month of April. Those are the real numbers that are going on right now. And from what I see, they aren't going down. Now, rent is starting to come down a little bit, not a lot, but I don't think you're going to be staring at a 10% increase when your lease is due. That's a good thing. People are getting some relief there. How's the commercial market? Still seeing commercial construction going on throughout the city. Mark, I follow it a little bit, but I don't, because I don't sell commercial, I don't dive into the numbers as much as I do here on residential. And I am seeing more commercial buildings going up. If you look at the Phoenix, let's see, what's it called? Phoenix Business News. Let me see if I can pull it up while I have everybody here. And they keep touting all these new developments that are going on out there. let's see. Here's an article here. If I can do it without crashing my computer. So, saying steel company adds warehouse to expand West Valley operations. So it's a steel company that's out there to provide steel for all the new warehouses that are going out there. Construction firm expands with new office in Phoenix Metro. So there's a lot going on in commercial real estate. North Scottsdale's on fire with new development and available land. And Noel says, wait till spring buying season over. We'll see prices drop. Don't agree. We won't see prices drop until we see inventory increase. Now, what will make inventory increase? That's the question. Will we see inventory increase? Because we're already sitting at 3,000 contracts every 7 days. That hasn't budged. If that goes down to 2,700, but we don't get a bump in inventory, then I don't see prices going down just because it's summer. Sales tend to dip a little bit because it's summer, because you go and you unlock those lock boxes and you take that little black box out and you set it down and it bakes in the sun while you're showing the house, and you go out and you pick it up, you got 2 third-degree burns. So wear your gloves, fellow realtors. It gets nasty out there. So, Noel, I think there's plenty of room and plenty of reason for prices to move. But, if we just look strictly at the numbers today, our inventory is not climbing. And, you just can't have a price decrease without inventory going up. And here it is right here. So we're sitting at 10,982 and it's going down. So the only time that we saw prices start to come down was when this happened. So that needs to happen above anything else. We need to see that. So if we're waiting for prices to go down in the spring market, then right about here, let's say end of June, then we need to see this happen. So let's wait and see what happens. And Noel here says, we're seeing a 40% drop in sales with tight inventory. Imagine how bad that will be when we have inventory. It's kind of a double-edged sword. We're seeing a 40% drop versus last year in sales, which is what I call, let's talk about 2021, because 2022, when the rates went up, everything fell off the wagon. But I called that the silly season. So there was a lot of bidding wars. Everything was going like crazy. Money was cheap, 3.5%, even lower than that. We were selling houses like there was no tomorrow. So the 40% drop in sales is compared to, on average, 2021, the first half of 2022. So we have seen that drop. But like I just illustrated, it's still hanging at about 3,000. Now, if we have inventory and we stay at 3,000, absolutely, you're absolutely right. But new construction is up. Their volume is up 10%. So if we have more inventory, will some of that new construction buying come into the regular market? That remains to be seen as well. And so, here's what's going to make inventory show up, in my opinion. One, we end up with a credit freeze, that something really goes wrong in banking, and the number goes from 3,000 a week to 1,800. You can't get a house, you can't get a loan, and so inventory starts to grow naturally. Because right now we're putting on 3,400 homes a week, and that number will probably continue. There will be no reason for it to increase, but just through natural attrition, if the buyers drop off, then yeah, we'll have an increase in inventory. Where's it going to show up? In that chart. So we have to watch and see what that happens. And I had said a long time ago, before 2022, that if you start seeing inventory get up quickly to 17,000, then put it on the market, because that means we're about to hit 20,000. And I'm trying to find something for a viewer here. Bear with me. Then put it on the market, because things are going to change. Well, lo and behold, we got a 19,000 and prices started dropping, and they dropped 17%. So what I'm looking for here, let me share this with you while I'm looking for it. I'm looking for the Cromford Market Index by city and the weekly chart. Somebody's asking for Chandler, soy. So let's see if this comes up here for you. Let me pull up Chandler. And Chandler is sitting at a Crawford Market Index 272. That is a seller's market. Clearly a seller's market. Anything over 110 is the seller's market versus buyer's market. East Coasters here, our market's starting to heat up. Any predictions for June, July in Queen Creek and Gilbert? What do you feel is a fair offer percent off the current asking price? A home that's on the market for 90 plus days. Well, obviously it's on the market 90 plus days. It's all about price. It's either price or condition. And so if on 90 plus days, offer whatever you think is fair and see what they come back with. Sometimes people get so stuck on their price that you go in and offer them, they're offering 500,000, you offer them 475, they just reject it. If the agent is competent on the other side, then they'll call you and go, well, where do you think we can get? So there really isn't a set number, Becca, that I can say, well, here's what I would do. But if they're on the market for 90 days, then yes, you can go in and offer them less because obviously they're overpriced. But keep in mind that right now, Chandler has got a Crawford Market Index that's clearly in the favor of sellers. So you're not going to be able to get that much off their current asking price yet. So unless, they've been on the market at least 45 days. So U-Haul is showing that for 2022, Arizona slipped to number 7 on the list of states people are moving to. Are you hearing inflow of people? Arizona slowed down? Yeah, because that's California. California was coming over like crazy, and they're not selling their houses as fast, so people aren't coming out here right now. Noel, you're more than welcome. I appreciate you watching, and appreciate that. Thank you very much. So, yeah, I think migration right now is kind of starting to slow down between states for a couple reasons. Like I commented the other day, Amazon's trying to call their people back to the office, so the opportunity to work remotely is kind of starting to dwindle a little bit. Like, wait, but you said I could work from home. Yeah, well, guess what? Production's down, so we need some of you to come back to the office. And it's not very popular with the Amazon people. I think my brother was telling me they were going to go on strike this weekend up in Seattle. So, who knows? I'm up here right on the edge of, I'm 18 miles across the water from Victoria, British Columbia, visiting my brother and friends. Had my 50-year class reunion last weekend. It was a blast, but the fires are kicking up in British Columbia once again, and we're starting to get that smoky haze that we had up here about 3 years ago when last time I was up visiting. And man, I hope that doesn't return again. Some of the other things to look for when you're looking at, besides just inventory, is I like to look at seller contribution towards closing costs. Because if a market's brisk, then sellers don't have to offer too many incentives. If the market starts to slow down, that seller contribution starts to increase. It's kind of, but it's a lagging, number again. It's not exactly the canary in the coal mine, but when I look at my 7-day moving average, the other thing that I really like to look at is this gap here, the blue line, number of listings coming on, and red line, number of listings under contract. And that gap right now is about 91%. 91% of new listings are going under contract. When prices dipped, that got down to 57%. So as long as we're in that 85 to 90 range, there's no pricing pressure for prices to come down. You get down to 60%, aha, canary in the coal mine. It's time to reduce your list price because listings are outgrowing contracts. And we have Mark here saying, just joined in. What's it going to take for interest rates to go down again? I'm interviewing Barry Habib on June 19th, and that's going to be one of my questions. I also put out a video yesterday walking around the river up here saying, is it a bad thing if interest rates kind of hang where they are? When you really look at our market and we get up to 7% and we stay there, the market's kind of flat. And we're looking at numbers right now. It's not diving. It's not climbing. It's just kind of staying flat. Climbing in a few cities. It's going good in new construction. But what if we hung out for a year in this range and the market doesn't go nuts? And sellers can still sell if they're priced right, so it's not crazy. Buyers, if they can't afford it right now, and real estate is not climbing up month after month after month, it's a great opportunity to just keep salting the money away. Because guess what? In this kind of a market, your rent is not going to go up. So it's not a bad plan to kind of sit tight if rates maintain this level. Because to me, the opposite of that, if rates went down to 5% again, then we get into that awful bidding war situation that I don't want to see us return to. It's not so much the bidding war on prices, but all of the other ancillary things we did, like waive the inspections, cover the gap on the appraisal. Appraisals are getting kind of tough right now. It's hard to hit that offer price right now. Appraisers some of them are factoring in that the market's going down when it's not. So it gets kind of tough. You might be off, $5,000 or $10,000 on an appraisal. Back during the silly season, people would just go, okay, well, I'll give you that 10K. So I don't want to see us get back to that. I think it would be okay for us to sit and wait and interest rates stay where they're at, because the other side of that equation is the central bank. 30% of our CPI is housing and rent. Well, rent is starting to decline because of we're getting more supply. But if we heat up the real estate market again, they're going to have to jump back in and give us more rate increases to try and pare that back. Now, 3 of the Fed chairmen kind of scolded Congress last week and said, hey, guys, we can't do this all by ourselves, because the amount of money that the Treasury is spending is greatly offsetting any pullback that the central bank is trying to do. Now, we just are on the verge of having a debt ceiling increase. Once again, this will be number 79. What's that going to do for the markets? And how much are they really cutting back on spending? From what I read, not much. They're going to hold at like 2022 levels. Well, we spent like drunken sailors back then. So that's not helping inflation. The reason I bring that up is, central bank's going to have to clamp down tighter and tighter in order to see improvements there. Now, some of the inflation numbers could change pretty good as we get into the summer, because we're always comparing them to last summer. Last summer was pretty heated up. So year over year declines may look better. The Fed may decide to pause. I doubt if we're going to see a decrease anytime, but it all depends on 10-year treasuries. So sometimes the Fed can do nothing and rates go down. So that's what we want to, keep a close eye on. I was asked this morning via an email, where do I go to track interest rates? Because we bought in November and we'd like to know when we can refinance. Now, mortgagenewsdaily.com gives you a national rate. But if you really got your eye on figuring out when to refi, either go back to your other lender or find a lending broker and say, can you let me know where rates are and just keep me up to date on a weekly basis? Because they can look at your information and say, well, based on your information, instead of 7.25, I could probably get you 6.9, but let me keep you posted on where rates are. And then, because if you're just going to Quicken or Zillow or Mortgage News Daily, you're going to get a national average, but your local mortgage broker who can shop over 30 lenders can probably give you a better idea and a better rate. And keeping track of it, I like Mortgage News Daily just because it's a national average, but I'll look on there and see it's 7.4, and then I'll talk to Pat. He goes, well, actually it's 6.8. So it all depends on person's debt load and their credit rating and all that fun stuff. So that's how I would watch rates. Mick, where do you think interest rates are headed? I know I did a survey on my community tab just the other day. 55% of you feel that we're going to have 2 more rate hikes. I thought that was interesting. The market is not quite that high. I think they're thinking, I think there's a 30% chance that we're going to have 1 more rate hike. And so, but our survey on this channel says 55% say 2 more rate hikes. All depends on the summer. At 7%, it's interesting. Like when I pointed out the psychology of contracts and people listing their homes, when we first hit 7%, everybody ran for the hills to list their homes. Now everybody's just kind of sitting back and yawning. So I think we're accepting it. So Terry says, I think 9% by year end. That would mean inflation's going to really have to keep raging, Terry. So we'll see what happens. You want to bet me $1? Hey, and you made a mention of Aggies the other day. My God, when was the last time you were up here? They've been closed for 15 years. Terry's from this neck of the woods. Mick just answered survey, and I'm in with the up and up crowd. Yeah, so it's kind of fun. Oh, sure, he's going to bet me $1. Okay, it's official. I'm betting Terry that rates are not going to be 9% by the first of the year. So you've heard it first here. Going to bet Terry, and you live out in the West Valley, right? So I can actually now, if I win, you have to drive to me and give me the $1. And if you win, I'll drive out there and give you the $1 and we'll spend it on coffee, I'm sure. Well, I hope everybody has a fabulous Memorial Day weekend. I got invited to a friend's house tonight for a nice salmon dinner. I'm getting kind of tired of salmon, but I know that he has a lot of fresh salmon in his fridge because he goes fishing just about every stinking day. So should be a lot of fun. Have a great Monday. Take on the rest of the week. See you soon. Take care.